Fine. Let's continue with what we were discussing in the morning. We were discussing about the hire purchase in that reverse working methodology. So let's go to the reverse working model based question. If you already have question, you can take that. And there would be a second problem which revolve around this reverse working methodology. So the reverse working, morning I was explaining you, like if they give you all the detail, rate of interest, total cash price, installment amount, when everything is given, how we have to go about that, we had seen in the morning. Now what we will do, we shall go to the reverse working where they give us only that particular the cash price, installment, and rate of interest. Very specifically, installment and rate of interest alone. If they give, how to go about. Let us see that. Kindly confirm whether Excel sheet visible. Kindly confirm. Fine. Excel sheet, I hope visible. So you can start responding as you require some detail or as you feel comfortable. So let us start with the first one. Good. So let's go to the question now. The question is X purchased a TV on hire purchase system. As per the terms, he is required to pay 3,000 down, 4,000 at the end of first year, 3,000 at the end of second year, and 5,000 at the end of third year. Interest is charged at 12% per annum. This is the question given to us. So let's start with that now. Morning we were having this. In fact, I told you if you take 1,08,460, 1,08,460 into 10 by 110, it will tally. But you take 1,70,000 into 10 by 110, it will not tally. Let me repeat, it will not tally. Reason simple. Interest is calculated on outstanding. If I take 1,70,000, it is not outstanding. So 10 by 110 won't tally. To make it to tally, I have to add the cash price component, which is principal portion of installments 2 and 3. If I add to 1,70,000, closing outstanding will come. On that, your 10 by 110 will tally. Let us use that kind of a working now. Let us use that kind of a working. So take question 2, which we are going to solve now. So in that third installment, first, second, and third given clearly 5,000 and 12% rate of interest. Let's take that and go for a reverse working now. So this calculation will enable us to find interest out of each installment. After finding such interest, we will take the total installment and then interest. Reduce interest. This is total installment. If we reduce interest, what you get is principal portion. This is also called as cash price portion. Cash price. So let's go for installment number 3. Installment number 3, you can refer the question. 5,000 is the amount. I am writing this side installment number 3. You can use this like a format. Any question you can solve because the reverse working is a very popular method. So into 12 divided by 112. I told the logic now. Actually what happens? You are having installment rate of interest available. 12 is the rate of interest. So what happens is 5,000 into 12 divided by 112. If your principal portion is 100, if your principal portion is 100, interest portion 12. So installment 112. In the margin of your notebook, if you notice these three details, it will be very useful for revision also. Let principal 100, then our interest 12. What you get as installment, what you get as installment 112, 112. So this is how it works out. So 536 is the total amount of interest. Now what happens? Installment 5,000, interest it comes to 536 interest. So principal 5,000 minus 536. 5,000 minus 536. 4464. That's what would be principal portion. This you have to do consistently. Follow closely the second step, which is most important. Second step. What I will do, 5,000 second installment, let us check from the question. Second installment. If you read the question, second installment is 3,000. 3,000 at the end of second year. So we need to take 5,000, not 5,000, 3,000. 3,000 plus 4464. 4464 into 12 divided by 112. Now follow closely. We are going to share something important. Outstanding at the end of second year, if you refer, follow carefully. I am sharing something minute. The explanation will not be available in books. This is only your understanding. So end of second year, you can analyze. Second installment will be fully due. Interest accrue. By the time interest accrue, so entire interest will be due at the end of, entire installment will be due. First year interest will accrue at the end of first year. If you take a loan for, let us say 20 lakhs, all the interest, if it is a 10-year loan, all the 10-year interest will not be will not be due in the beginning itself. First year interest will be due at the end of first year. Second year interest will be due at the end of second year. Like that, in a phased manner, the interest shall become due. I hope you understand the criticality of this point. Having said that, let's continue now. So into 12 by 112, if you calculate how much we get, let's get that, plus 3,000 into 12 divided by 112. If you calculate, you will get 800. I am rounding off. I hope you are also able to follow that. So 3,000, and then what happens? Interest portion 800. Automatically, what remains is your cash price. So it would be 2,200. We have to present just one more. That is your installment number 1. Now again follow carefully. I am coming in the reverse. This method itself called reverse working. Let's go back to question again. Refer question. So the question is 3,000. 4,000 is the first year installment. At the end of first year, 4,000. So take 4,000. Follow carefully. At the end of first year, first installment will be fully due. I am repeating that point. At the end of first year installment will be fully due. For second year, third year, only cash price will be due. So only cash price. So 2,200 plus 4464. 4464. This would be the due. So into 12 divided by 112. So what you will get now, 4,000. After that, that interest portion, let's calculate now. So now I have to add 4,000 plus, I am adding in this direction. Refer this now. I am adding in this direction. I have to add these numbers. That's all. 4,000 plus 2200 plus 4464. 4464 into 12 divided by 112. You will be getting 1143. 1143. Deduct, you get 2857. One more, the installment can be down payment. Down payment does not include interest, so no segregation required. You know that factor. Down payment does not require, does not include interest. 3000 is the down payment. 3000. So 3000 down payment, no interest, so zero. So balance also will be 3000. If you add all this, what you get? Cash price. Now, why we need cash price? I told in the beginning, your first entry in the books of hire purchaser, the first entry that we pass, that first entry shall be made based on the cash price. What is the entry actually? HP asset account debit to hire vendor account. Let me repeat. HP asset account debit to hire vendor account. That answer will be 12,521. Now, some of you may wonder, he is doing something and all. Is it correct? This doubt always comes to us, right? In the exam also, we have solved okay, but is it right? For that, what you can do, prepare this table. Now you have all the detail. You have total cash price. You are having rate of interest. You are having installment also. Prepare this table. If this tallies, our answer right. That's all. Let us check whether it tallies. The key point is you are calculating interest on the outstanding and not on a specific installment. That's what you should always keep in mind. So the total cash price, let's check from the previous working, 12,521. 12,521. And rate of interest, it should be at the rate of 12%. 12%. There is no interest on our down payment. There is no interest on our down payment. And the amount, if you refer, 3,000 is the down payment. 3,000. Entirely principal portion. Installment is also 3,000. 9521. Let's calculate interest for the first year. You can calculate. First, let me finish the installments, which are very easy. 4,000, 3,000, 5,000. Those are the installments. 4,000, 3,000, 5,000. These are the three installments. Now, interest, we should calculate on the opening balance at the rate of 12%. Opening balance we have to take on the 12%. You see it tallies now. 1143 we got there. You look at the first year interest. First installment interest 1143. It tallies. Actually, we are computing it on the outstanding. So 1143. And second year also like that we can compute. We can compute like this. So is equal to opening balance into 12%. You will get 800. That's what the round off 800. After that, third installment similarly will tally 4464 into 12%. Into 12%, we will be getting 536. So look at the table, it tallies. Always you know all this: opening installment, opening outstanding, minus principal portion, reduce. You get closing outstanding. These type of points you already know. We are only repeating the same thing again and again. Now better I will hold it for some time so that those who have not taken can either take down parallelly or take a picture so that we can proceed to next. You can copy slowly on your own, but understand the methodology. If reverse working clear, kindly indicate in chat. Those who are participating, kindly indicate. See, Sai Sriram currently giving. Thank you. Actually, I have calculated and posted every time. It is fine, Sai Sriram. Thank you. Now, what you have to do, those who are following this, try to respond. Try to respond. If you are clear, indicate reverse working clear, REV, like that a code word between us. REV clear, like that you indicate, proceed. So for the benefit of those who are well conversant with Tamil, reverse working அப்படின்னா என்னன்னா இன்ஸ்டால்மெண்ட்டும் ரேட் ஆஃப் இன்ட்ரெஸ்ட் மட்டும் கொடுத்துருக்காங்க. கேஷ் ப்ரைஸ் எவ்வளோன்னு தெரியாது. கேஷ் ப்ரைஸ் அப்படின்னா நார்மல் செல்லிங் ப்ரைஸ். அந்த நார்மல் செல்லிங் ப்ரைஸ் கொஸ்டின்ல கிடையாது. அப்போ என்ன பண்ணுறோம், லாஸ்ட் இன்ஸ்டால்மெண்ட்லேருந்து ஆரம்பிக்கிறோம். ஏன் ஃபர்ஸ்ட் இன்ஸ்டால்மெண்ட்டே நான் எடுத்து போட்டுக்க முடியாதா? எடுத்து போட்டால் இன்ட்ரெஸ்ட் சரியாக வராது. ப்ரீவியஸ் ப்ராப்ளத்தை வச்சே டெஸ்ட் பண்ணி பார்க்கலாம். நீங்கள் ப்ரீவியஸ் ப்ராப்ளத்தை எடுத்தே போட்டு பார்த்தா அது ஆன்சர் வராது. அப்போ என்ன பண்ணணும், லாஸ்ட் இன்ஸ்டால்மெண்ட்லேருந்து ரிவர்ஸில் ஒர்க் பண்ணிக்கிட்டே வரணும். அப்போது லாஸ்ட் இன்ஸ்டால்மெண்ட்டை எடுத்தோம்னா அதில் லாஸ்ட் இன்ஸ்டால்மெண்ட் அந்த இன்ஸ்டால்மெண்ட் எண்டில், அந்த லாஸ்ட் இன்ஸ்டால்மெண்ட்டோட பீரியட் எண்டில் என்டையர் இன்ஸ்டால்மெண்ட் அவுட்ஸ்டாண்டிங்காக இருக்கும். பிரின்சிபலும் டியூவாக இருக்கும், இன்ட்ரெஸ்ட்டும் டியூவாக இருக்கும். அப்போ என்ன பண்ணுவோம், இன்ஸ்டால்மெண்ட் எடுத்துப்போம், மல்டிப்ளைடு பை ரேட் ஆஃப் இன்ட்ரெஸ்ட் நியூமரேட்டர் 100 + ரேட் ஆஃப் இன்ட்ரெஸ்ட் டினாமினேட்டர். அவ்வளோதான் ஃபார்முலாவே, வேற ஒன்றுமே கிடையாது. ரேட் ஆஃப் இன்ட்ரெஸ்ட் நியூமரேட்டர் 100 + ரேட் ஆஃப் இன்ட்ரெஸ்ட் டினாமினேட்டர். நம்ம ஏன் இப்படி போடணும், வேற ஆப்ஷனே கிடையாது. ஏன்னா நம்மக்கிட்ட என்ன இருக்குது, இன்ஸ்டால்மெண்ட் அமௌண்ட் இருக்குது, ரேட் ஆஃப் இன்ட்ரெஸ்ட் ரெண்டு தான் இருக்குது. ஸோ அதனால அப்படி போட்டு இன்ட்ரெஸ்ட்டை கண்டுபிடிக்கிறோம் ஒரு ஸ்டேஜ்லேயும். அது முடித்த பிறகு என்ன பண்ணுறோம் அப்படின்னா, செகண்ட் இன்ஸ்டால்மெண்ட்டுக்கு வரும்போது செகண்ட் இன்ஸ்டால்மெண்ட் எண்டில் த என்டையர் செகண்ட் இன்ஸ்டால்மெண்ட்டும் டியூவாக இருக்கும். அது இல்லாமல் தேர்ட் இன்ஸ்டால்மெண்ட்டோட கேஷ் ப்ரைஸ் மட்டும்தான் டியூவாக இருக்கும். ஒரு இயரோட இன்ட்ரெஸ்ட் எப்போ டியூவாக வரும், இப்போ இயர்லி ரீபேமெண்ட்னு வச்சுக்கிட்டோம்னா அந்த இயர் எண்டில் தான் அந்த இன்ட்ரெஸ்டே டியூ. ஸோ பிகினிங்லேயே நான் இன்ட்ரெஸ்ட் எடுத்து போட முடியாது. அதனால அந்த ஃபுல் இன்ஸ்டால்மெண்ட்டை எடுத்துப்போம், அப்புறம் ஆட் பண்ணுவோம். எதை ஆட் பண்ணுவோம், தேர்ட் இன்ஸ்டால்மெண்ட், அதுக்கு நெக்ஸ்டாக இருக்கிற இன்ஸ்டால்மெண்ட்டோட கேஷ் ப்ரைஸை மட்டும் ஆட் பண்ணுறோம். இதே தான் திருப்பி திருப்பி ரிப்பீட் பண்ணுவோம். எத்தனை ஸ்டெப்பாக இருந்தாலும் திருப்பி திருப்பி இதையே போடுவோம். ஸோ இப்படியே போட்டுக்கிட்டே வரும்போது என்ன ஆகும், ஒரு இன்ஸ்டால்மெண்ட்டுக்கு இன்ட்ரெஸ்ட் கிடைக்கும். இன்ட்ரெஸ்ட்டை இன்ஸ்டால்மெண்ட்லேருந்து ரெடியூஸ் பண்ணிட்டா பிரின்சிபல் போர்ஷன் எல்லாத்தையும் ஆட் பண்ணால் அவ்வளோதான் கேஷ் ப்ரைஸ். இவ்வளோதான் இதில் விஷயம். இது நமக்கு கொஸ்டின்லேயே ரேட் ஆஃப் இன்ட்ரெஸ்ட் கேஷ் ப்ரைஸ் ரெண்டுமே கொடுத்துட்டா இந்த ஒர்க்கிங்கே வராது. கொஸ்டினில் கேஷ் ப்ரைஸ் இல்லாததுனால தான் நம்ம இப்படி கண்டுபிடிக்கிறோம். நவ் இஃப் யூ ஹாவ் எனி டவுட் யூ கேன் ஆஸ்க் ஆன் திஸ். The very next question, which is also past exam question, let's finish that also. So installment with the time gap, there is a model. Before I go to that model, A acquired, take your question number 3, your PDF you can take question number 3. A acquired on 1st January 2015 a machine under hire purchase agreement which provide for 5 half-yearly installments of 6,000 each, first installment being due on 1st July 2015, assuming that applicable rate of interest is 10%, calculate the cash value of the machine. All working should form part of answer. In the third question, இப்போ நம்ம என்ன போட்டோமோ இதே மாடல், the same question which we completed, the same model. So what you have to do, try this as a homework. Now just one point we will discuss. It is 6 monthly installment. This question has come so far 2 to 3 times in the main exam. Same question almost. So it is 6 monthly installment. If it is 1 yearly installment, how are we calculating? You can check the calculation, it is available. 12 by 112 I take. So here the rate of interest, we have to take 10% per annum, means 2 calculations I will give you. Should I take 10 by 110 into 6 by 12 or 1 year 10%? That means for 6 months it should be 5%. So 5 by 105. Which calculation I have to take? Can you indicate through chat? Try to participate. Proceed now. Now I asked you a question. Third question. It is 6 monthly installment, and we are going to follow reverse working method. Should our calculation be 10 by 110 into 6 by 12 or 5 by 105? Sai Sriram, good. 5 by 105. One answer coming already. Or both should lead to same answer, right? 10 by 110, 10% for 1 year. So should I take 10 by 110 into 6 by 12? You are having a calculation on hand. I asked you to take a picture also. This calculation. This is for 1 year interest. Now the present question is 6-month interest. So how to go about? Actually, both will not lead to same answer. You try in your calculator or try through notebook. 10 divided by 110. We all think both will lead to same answer, but it won't lead to same answer. You calculate into 6 by 12. It will lead you to not 5 by 105. Actually, for 6 months it is 5%. So 5 by 105 we should use. You should not use this calculation. If you wonder why, you solve this, you will get 5 divided by 110. So it is wrong. This answer not correct. Why I am saying it is wrong? We are telling through this computation, our numerator include only 5, which means 6-month interest, but your installment, that denominator include 1 year interest, not at all possible. If it is 6-month installment, it can include only 6-month interest. In installment payment system, there is no question of making future payment. There is no question of making future payment. So considering all that, we have to take it as 5 by 105. We should not take it as 5 by 110. I hope you understand. It has to be taken as 5 divided by 105. 1 year 1 year 10%. So for 6 months rate of interest 5%. So what you should take? 5 divided by 105. That is how it should be taken. I hope you are all clear and comfortable with this. If this is fine, we shall move to another point now. We shall move to another point. So this installment with the time gap, exactly like what you have done, same method you have to do reverse working. So for third question, answer how you have to work out instead of 10 by 110 into 6 by 12. That is wrong. You should use only 5 by 105 as Sai Sriram typed in the chat box. It should be like 5 divided by 105. Reason for that, 1 year interest 10%. So 6 months interest, that should be 5%. So we have to take 5 divided by 105 consecutively. You take answer will come. I think it may be somewhere near 25,976, something like that. Answer will come. It is very easy. Try that. Along with that, try two new very different questions. Installment with the time gap. I will give you answer. You try. 5 lakh would be the answer for both the questions. This question, again, same reverse working. Whatever we have done, enough, that knowledge. Only point, there is a very sharp point in the question. You see the date of sale, 1/1/2011. That's the date of sale. But when the first installment start, after a 2-year time gap. So 31st December 2011, zero installment. There is no installment. You check. Installment start only on after 2 years. Installment doesn't start on 31st December 2011. It start only on 31st December 2012. After 2 year only it starts. Accordingly, if you work out, that would be fine. So 31st December 2012. Take that, and 2-year time gap comes. So 31st December 2011 also you should take, and that portion shall be zero installment. 31st December 2011, it will be zero installment. Interest calculation, everything same. Try this. I will definitely show you the solution. Not necessarily now itself, later. So that you try once. If you are not comfortable, ask me. I will provide you the solution. This you can take as a homework. I told you, in fact, answer 5 lakh is the answer. So that only one step new, bearing that it is straight and simple. That I will demonstrate tomorrow, so that I'm giving you some time for you to work on it and then get back. We already discussed about journal entries in the books of hire purchaser, and then the repossession entries, interest due, all that. So hire purchaser book, if you check, what accounts will appear? HP asset. HP asset. HP asset is that asset acquired for hire purchase purpose or under hire purchase terms. So HP asset we will debit, hire vendor we will credit. And whenever we make payment of installment, hire vendor to bank. Like this, you have to present. Now, if that is also completed, let's go to another important point, insurance claim. The remaining time, hire purchase, you can try many more things based on the inputs given to you. The chapter will look better undoubtedly. Now let's go to another milestone topic called insurance claim. Now this insurance is a contract of indemnity insurance. So two parties involved in insurance accounts. One is the insurance company and the insured entity or person. And there are two types of claim. One type of claim called as loss of stock claim, another type of claim called as loss of profit claim. Loss of profit claim. First, let us take loss of stock claim. Loss of stock claim. In a loss of stock claim, how we are going to proceed for the purpose of loss of stock claim? Actually, first, what is this policy? Loss of stock policy. This policy will end on the date of loss. If the loss occur, let us say on 30th of April 2020, you need the closing stock on that date. The value of that closing stock will be paid as a claim. Let me repeat, the value of that closing stock that will be paid as a claim. That is what is your loss of stock claim. So for this purpose, we have to prepare trading account. If the stock records are maintained by the concerned entity, you can find the closing stock. Go by your stock record, take the number of units, multiply with rate, you get the value of stock destroyed by fire. If stock record not maintained, then you have to prepare something called memorandum trading account. In the memorandum trading account, the word memorandum, wherever you use, indicate memorandum of our memorandum accounting. So in the context of that memorandum accounting, what we will do, you will prepare a trading account. You will prepare a trading account, and in that trading account, when we finish all other things, what emerge as a balancing figure is the closing stock. This system is called memorandum trading account. Let me reiterate this point. In a memorandum trading account, you are going to prepare opening stock. Suppose, why we call it memorandum? Next reason. Daily we are not going to prepare trading account. In a loss of stock policy, what is extremely important, that loss of stock. I mean the date of loss. The date of loss. If you take 30th April, I said one example, 30th April 2020 as the date of loss, take opening stock. Opening stock, 31st March closing stock will become 1st April opening stock. Take opening stock. Take purchases. Take credit side sales. What you get is the gross profit by multiplying sales and GP rate. If question gives GP rate, fantastic, you can multiply GP rate. If question does not give GP rate, gross profit rate, we have to go by previous year trading account. Open previous year trading account, arrive at gross profit rate, arrive at GP rate. So sales into that GP rate will give you gross profit, The balancing figure what you get is closing stock. This is the approach we will be following in the memorandum trading account. And your claim amount shall depend on something called average clause. Now, what is that average clause? Average clause is like proportionate penalty. One line I am defining proportionate penalty for what? For under insurance. If a person is having normally 10 lakh worth of stock in their godown, but they insured only 8 lakh worth of the stock, that is called classic example for under insurance. If there is under insurance, then what we should do? Then the claim payable by the insurance company shall be proportionately computed and reduced. You take, for example, the 10 lakh stock level, 8 lakh insured. If there is a loss, follow very closely. I am telling something very big in a very simple manner. So, if average clause applicable, then your calculation, suppose if the total stock destroyed is 9 lakh, 9 into 8 by 10. What is the formula? Total loss multiplied by policy amount or insured amount divided by total stock on the date of loss. That is what you will take it as the claim amount. Are you comfortable with what I am speaking so far? Let me repeat the formula. Proportionate payment. That's the concept you have to remember for average class. So suppose if a person is having normally 10 lakh stock, 10 lakh stock, 8 lakh that person insured, 9 lakh stock destroyed by fire. How much will be the claim? This can be the question. The answer depend on applicability of average clause. If the question says subject to average clause, that means average clause applicable. Let me repeat. If the question says subject to average clause, that means average clause applicable. If average clause is not applicable, lower of policy amount and loss. What is our policy amount? 8 lakh. What is the loss? 9 lakh. Lower of the two will be paid as claim. When average clause not applicable. Let me repeat. When average clause is not applicable, policy amount and total loss, lower of the two will be paid as a claim. If you want make just 2-line note, I will type that for your clarity. This is insurance claim related points. Insurance claim. In that insurance claims also, what we are discussing is loss of stock policy. Loss of stock. So loss of stock, how are we going to calculate the loss of stock policy related accounts? That's what we are seeing now. So loss of stock claim, how we should proceed? Very, very simple. In this loss of stock claim, as I said, average clause, not applicable, not applicable. Then how are we going to calculate if average clause is not applicable? It is claim. This is insurance claim. Lower of total loss or policy amount. This is for your average clause applicability. If average clause applicable, let's go to that. If average clause applicable, then you have to adopt a formula. You cannot arrive at the claim like this. Total loss multiplied by policy amount divided by total stock on the date of loss. Total stock. Total stock on the date of loss. That should be our denominator. This is the way we present the formula. This is called average clause formula. Now, most important point, what you are computing through this formulas, insurance claims. Insurance claims. insurance claim in case of loss of stock policy. Now, most important point regarding this application, average clause applicability and other things. Average clause can only reduce your claim. Let me repeat, average clause can only reduce your claim. Average clause cannot increase your claim. Now, for the benefit of those who are comfortable with Tamil, இன்சூரன்ஸ் கிளைம் அப்படின்னா என்னன்னா, இன்சூரன்ஸ் கம்பெனி கூட இருக்கிற கான்ட்ராக்டால யாரெல்லாம் இன்சூரன்ஸ் எடுக்கிறாங்களோ, லாஸ் ஆஃப் ஸ்டாக், லாஸ் ஆஃப் ப்ராஃபிட் அப்படின்னு 2 டைப் ஆஃப் பாலிசி இருக்கு. லாஸ் ஆஃப் ஸ்டாக் பாலிசி யார் எடுக்கிறாங்களோ அவங்களுக்கு கிளைம் கொடுக்கணும் இன்சூரன்ஸ் கம்பெனி. எப்பன்னா அந்த பர்டிகுலர் ஈவெண்ட், அந்த ரிஸ்க் வென் இட் அக்கர்ட், அந்த ரிஸ்க் ஃபயர் ஆக்சிடென்ட் அப்படின்னு எடுத்துக்கிட்டா அந்த ஃபயர், அதனால எவ்வளோ ஸ்டாக் டெஸ்ட்ராய்டோ அதை வந்து கிளைமாக கொடுப்பாங்க இன்சூரன்ஸில். அதுக்கு ஆவரேஜ் கிளாஸ் அப்ளிகபிளா நாட் அப்ளிகபிளா அதை வச்சு தான் நம்ம ஆன்சர் மாறும். இப்போ ஃபர்ஸ்ட் ஸ்டெப் என்னன்னா, ஸ்டாக் என்னன்னு தெரியணும், டேட் ஆஃப் லாஸ். ஸ்டாக்கை எப்படி கண்டுபிடிக்கிறது? இப்போ ஸ்டாக் ரெக்கார்டு வச்சுருந்தாங்கன்னா ஈஸி, அதுக்கு பேர் வந்து ஸ்டோர்ஸ் லெட்ஜர். அந்த ஸ்டோர்ஸ் லெட்ஜர் இருந்ததுன்னா அந்த ஸ்டோர்ஸ் லெட்ஜர் படி என்ன குவான்டிட்டி இருக்கோ அதை எடுத்து ரேட்டை மல்டிப்ளை பண்ணால் முடிஞ்சு போச்சு, ஈஸி. சப்போஸ் ஸ்டோர்ஸ் லெட்ஜர் இல்லை, அப்போ என்ன பண்ணணும்? அப்போ நம்ம என்ன பண்ணுவோம்னா, ஒரு ட்ரேடிங் அக்கௌண்ட் போடுவோம் டேட் ஆஃப் லாஸ் வரைக்கும். இதுக்கு பேர் மெமராண்டம் ட்ரேடிங் அக்கௌண்ட். எதனால இந்த நேம்? நார்மல் ட்ரேடிங் அக்கௌண்ட்னா ஒரு இயருக்கு ஒன்ஸ் ப்ரிப்பேர் பண்ணுவோம், இல்லைன்னா ஒரு பீரியட் கேப்பில் ப்ரிப்பேர் பண்ணுவோம். இந்த ட்ரேடிங் அக்கௌண்ட் அது மாதிரி எந்த ஃப்ரீக்வன்சியும் கிடையாது. ஸோ இது வந்து ஒரு பர்டிகுலர் பர்பஸ்க்கு. ஸோ டபுள் என்ட்ரி கம்ப்ளை ஆக தேவையில்லை. மெமராண்டம் அப்படின்னாலே டபுள் என்ட்ரிக்காக நம்ம அதை போடலை, மிஸ்ஸிங் இன்ஃபர்மேஷனை கண்டுபிடிக்கிறதுக்காக போடணும். அந்த மெமராண்டம் ட்ரேடிங் அக்கௌண்ட்ல எல்லாத்தையும் போஸ்ட் பண்ணிட்டோம்னா க்ளோசிங் ஸ்டாக் பேலன்சிங் ஃபிகரா வரும். அந்த ஸ்டாக்கு தான் லாஸ் அப்படின்னா அதுக்கு மேலே இன்சூர்ட் அமௌண்ட் இருந்தால் பிரச்சனையே கிடையாது, ஃபுல்லாக கொடுத்துருவாங்க. ஸோ நமக்கு வந்து இன்சூர்ட் அமௌண்ட் அதுக்கு கீழே இருக்கு. அப்போதான் ஒரு எக்ஸாம்பிள் சொன்னேன், 9 lakh லாஸ், இன்சூர்ட் அமௌண்ட் 8 lakh. இன்சூர்ட் அமௌண்ட் ஜஸ்ட் 8 lakh தான் இருக்கு அப்படின்னா ப்ரொபோர்ஷனேட்டாக கொடுத்தா ஆவரேஜ் கிளாஸ் அப்ளிகபிள்னு அர்த்தம். ஸோ இப்போ நம்ம 80% தான் இன்சூர் பண்ணியிருக்கோம். 10 lakh நம்மளோட நார்மல் ஸ்டாக் லெவல், 8 lakhs தான் இன்சூர் பண்ணுறோம். அப்படின்னா என்ன? ஃபுல்லாக இன்சூரன்ஸ் பாலிசியை வச்சு கவர் பண்ணலை, நம்ம ப்ரீமியம் ஃபுல்லாக நம்மளோட ஸ்டாக் லெவலுக்கு பே பண்ணலை. அப்போ ப்ரொபோர்ஷனேட்டாக தான் கிளைம் கொடுப்பான். அதுக்கு கால்குலேஷன் 9 lakh இன்டூ 8/10. இன்னொரு ஆல்டர்னேட்டிவ் என்ன? நம்ம ஃபுல்லாக கவர் பண்ணிடுறோம், அப்போ ஃபுல் அமௌண்ட் கிளைமாக வந்துடும். அவ்வளோதான், சிம்பிள். ஸோ இதுக்கப்புறம் ஒன் மோர் ஸ்டெப். சப்போஸ் ஆவரேஜ் கிளாஸ் நாட் அப்ளிகபிள் அப்படின்னா பாலிசி அமௌண்ட் லாஸ் ரெண்டுல விச் எவர் இஸ் லோயர், எது கம்மியோ அதை கொடுப்பாங்க. சரி, நம்ம இப்போ ஒரு 20 lakhsக்கு இன்சூர் பண்ணிடுறோம், லாஸே வெறும் 4 lakhனா 20 lakhs போய் கேட்க முடியாது இன்சூரன்ஸ் கம்பெனி கிட்ட. என்ன லாஸோ அதுதான் கொடுப்பாங்க நார்மலா. இன்னொரு கேஸ், நம்ம 20 lakhsக்கு இன்சூர் பண்ணியிருக்கோம், லாஸ் 40 lakhs லாஸ் ஆயிடுது, கோடவுன்ல ஃபயர், 40 lakhs கொடுக்க மாட்டாங்க. நம்ம என்ன அமௌண்ட்டுக்கு இன்சூரன்ஸ் கவர் பண்ணியிருக்கோமோ அதுதான் கொடுப்பாங்க. ஸோ லோயர் ஆஃப் த டூ, that is what is the principle for loss of stock. Now if LOS clear, kindly indicate those who participate. Loss of stock, LOS, you put LOS clear like that, so that the conceptual clarity we get out of the discussion. That's it. Proceed now. I'm waiting for your response. Once you finish, we can start the question. Now we will discuss one more terminology called salvage value. Salvage value. What is the meaning of the terminology salvage value? It is the scrap realization. Scrap realization, salvage value. Now that salvage value will be reduced from the stock to find out your total loss. Salvage value. What is the meaning of salvage value? The value what we get, see, as a partial recovery or as a scrap sale. If there is a fire accident, there is no rule that all our stock should become ashes. There can be some stock in a damaged condition or in a partly damaged condition, when you sell that stock, what you get, and that is called salvage value. So in one line, if I have to define this, it is a gain in loss. What is the loss? That fire accident is the loss. So what is salvage value? When we sell that partly damaged goods, whatever you get as scrap recovery. So in short, it is gain in loss. It is gain in loss. What is the loss? That fire accident due to which stock are destroyed. What is the gain in that loss? The little salvage recovery which you get. Now, most important message. If that salvage value, if that salvage value is actually received by the insured entity, an entity which is covered by insurance. If they receive the salvage value, we can reduce that. We can reduce that. Suppose when we don't get the salvage value, we give it to insurance company itself. That salvage value we are giving to insurance company itself. Then we should not reduce, because that gain in loss is not coming to the insured person. Now with this, let us go to the first question under insurance claim chapter. You can take that. On 2/6/2015, the stock of Mr. Black was destroyed by fire. However, following particulars were furnished from the record saved. Stock on 1st April 14, 1,35,000. Stock on 31st March 2015, 1,62,000. But this stock, you read the question, it is not given at full value of cost. It is given at 90% of the cost. That means I should convert it to 100%. So if I convert 1,62,000 into 100 divided by 90, you will get 1,80,000. That's the full value of closing stock. Actually, your date of loss, very important detail. Date of loss is 2/6/2015. So we will prepare a memorandum trading account from 31st March 2015 to 2/6/2015. That's a requirement. Purchases for the year ended 31/3/15, 6,45,000. Sales for the year ended 31/3/15, 9 lakh. Purchases from 1/4/15 to 2/6/2015, 2,25,000. Sales for the same period, 4,80,000. Now, few adjustments are also given. Sales up to 2/6/2015 include 75,000 being goods not dispatched to the customer. The sales invoice price is 75,000. Another one, purchases up to 2/6/2015 include machinery acquired for 15,000. Purchases up to 2/6/2015 does not include goods worth 30,000 received from suppliers, as invoice not received up to the date of fire. These goods have remained in the godown at the time of fire. Value of stock salvaged from fire 22,500, and this has been handed over to insurance company. If you have physical copy, underline this sentence. When the salvage value handed over to insurance company, we should not reduce that salvage value from our value of the loss. And insurance policy is for 1,20,000 subject to average clause. That means average clause applicable. Ascertain the amount of claim for loss of stock. So let's go to the answer. Now, first, we have to prepare this trading account to find out the gross profit. Since I don't have gross profit, we are preparing trading account for 2014-15. Opening stock, everything picked up from the question, very easy. The trading account for 14-15 I am preparing. Your date of loss, refer the question. Date of loss is 2/6/2015. But the memorandum trading account, we are going to prepare only up to that particular 2/6/2015, up to the date of loss. Here, the first trading account I am showing to you is the previous year trading account. And that previous year trading account, why we prepare? We need gross profit for our memorandum trading account. To find the gross profit, we are presenting previous year trading account, where I post opening stock, and then purchases, after that sales, everything picked up from question. This calculation, while reading the question itself, I said closing stock given at 90% of cost. So we have to take it as 1,62,000 into 100 by 90. And if you take the gross profit as the balancing figure 3 lakh, using that we are finding gross profit ratio. Gross profit ratio, you all know, gross profit divided by sales into 100. So 3 lakh is our gross profit, you can check. And 9 lakh is the sales. So what you get, 33.33%. First take this trading account. I will hold it for few minutes. Take the trading account. Take that. When those who completed this need not wait. Prepare memorandum trading account period covered 1st April 2015 to 2nd June 2015. Kindly prepare. I am waiting for those who are taking down parallelly. Prepare another trading account. Prepare another trading account. It should be from 1st April 2015 to 2nd June 2015. Prepare. In that, find the closing stock as a balancing figure. And for that, two adjustments are required. First, from sales, you should reduce 75,000 because goods are not dispatched. It is still with our godown. So it is not sales at all. We are reducing. And purchases include 15,000 machinery acquired. Machinery purchase cannot be taken as purchase. You know that would be a PPE item, property, plant, equipment. So take your total purchase, reduce machinery purchase, and also reduce that 30,000, the amount received from supplier as invoice not received up to the date of fire. Reduce that, and as a result, what you get is that net purchase and only these two adjustments. All other things in your trading account regular format remain same. So now the task I have given to you is the preparation of memorandum trading account for the period involved. I am writing the period from 1st April 2015 to from 1st April 2015 to 2nd June 2015. Prepare that. This is the period for which you have to prepare memorandum trading account. Give me the value of stock, then we will start. In the chat, you can respond. I am waiting there in the chat. First, you compute the closing stock and then give the closing stock. For your calculation, opening stock already available 1,80,000. 31st March 15 opening stock will become 1st April. 31st March closing stock will become 1st April opening stock. One answer given by Sai Sriram, 90,000. Check your answer, Sai Sriram. Check your answer. Follow carefully. This would be your memorandum trading account. Hardly 2-3 adjustments. That's all. Now you see the memorandum trading account. As I was saying you just now, 31/3/2015, 31st March 2015 closing stock will become opening stock on 1/4/2015, 1st April 2015. Amount 1,80,000. After that, purchases you have to take from the question information. Refer question. Purchase, I am reading from the last but one. You read that item. Purchase from 1/4/2015 to 2/6/2015. Last two items in the question, the table, they indicate the memorandum trading account related detail, which is from 1/4/2015 to 2/6/2015. So that amount is 2,25,000. 2,25,000. So let's take that 2,25,000. Reduce couple of adjustments we have to make. First, reduce purchase of machinery. Purchase of machinery is not your business purchase, so we deduct purchase of machinery. Then add purchase not recorded. There is a purchase not recorded. Look at that third detail, third paragraph. Purchases up to 2/6/2015. The importance of 2/6, 2nd June. The 2/6/2015 is, it is date of loss. Date of loss. It does not include goods worth 30,000 received from supplier. Received from supplier. So what we do, add purchases not recorded 30,000. So reduce 15,000, add 30,000, you get 2 lakh 40,000. Similarly, come to sales, 4 lakh 80,000 given in the question. Goods not dispatched, I should reduce. That is 75,000. You can check. Look at the question now. Look at the question. Goods not dispatched given as first detail. Goods not dispatched. Sales up to 26/2015 does not include rupees 75,000 goods not dispatched to customer. Invoice price is 75,000. That's what we reduce. So outright sale is only 4 lakh 5,000. Calculate gross profit. That gross profit should be 33 1 by 3%, one third. So 4 lakh 5,000 into 1 by 3, what you get? 1 lakh 35,000. That's your gross profit. So what emerged as balancing figure? 1 lakh 50,000. In this question, we are not reducing salvage. Normally, we should reduce. Why we are not reducing salvage? This is the total stock destroyed by fire. Balancing figure, entire closing stock destroyed. That's why we are taking it as total stock destroyed by fire, 1 lakh 50. Salvage value 0. So total loss 1 lakh 50. Apply average clause. When we apply average clause, insurance claim is equal to total loss multiplied by insured amount. We can also call it as policy amount divided by total stock. So 1 lakh 50,000. Question give you insured amount 1 lakh 20,000 divided by 1 lakh 50. Ultimately, what you get as answer? The answer is 1 lakh 20,000. That's your insurance claim. So as I was telling you, average clause can only reduce the claim. Now total stock destroyed 150. Because of average clause, we are getting only 1 lakh 20,000. Just one step more, average clause, and that's salvage. Take the entire answer. Even if it takes 3 4 minutes, it doesn't matter. I will wait. The sequence of solving a question, that feel should be there. No doubt you can take a picture, but it will become like a book thereafter. Try to solve yourself now. I have given you the whole trading account again. Try to take down step by step so that you will be very clear. Take that now. And if you have any doubt, you can ask through chat. No problem, Sai Sriram. You are 1 lakh 50,000, right? Janaki also gives that 1 lakh 50,000. Correct. And that average class also you take. Mostly you would have done. I mean, that 150 answer conveys that message. You might have already done. Just if there is a change, update that change. That's all. And that two steps. After that, reducing salvage and application of average class. Both you apply. And if anybody having any doubt on this, you can ask. I am waiting for your response in the chat. If you have any doubt. Once you completed this, indicate we have to go to next.
லேப்டாப் வச்சுட்டு அது பேசுதான்.
Fine. If you completed this, we can go to another model called loss of profit claim. There is yet another model called as loss of profit claim. Now, what is that loss of profit claim? In that, what happens is we are having a setback period. See, if there is a fire loss, let us say in a factory in Chennai, there is a fire loss. So you cannot expect like next day itself all the production will be all right. That is possible only in movies. Within one song, one person who is nothing will become everything. That is possible in movies because they cannot show movie for several days. That's why that kind of a system. Real life, you know better. Even the Chennai Silks fire, which happened a few years ago in Chennai, it took lot of years. Even today, the company is not in full operating form, that shop. See, why I am quoting that particular example is simple reason. If there is a fire accident, there would be something called a setback period. That period called indemnity period. So, what is the setback period? If there is a fire accident on 2nd June, like this question gives, 2/6/2015, if business is affected for around 6 month period, during that 6 month period, the company cannot have normal business. It is not possible for them to have a normal business. So business severely affected. Now we may feel let it be affected. And during that period, insurance company support the insured is the entity covered by insurance. In this whole chapter we don't discuss insurance company accounts. Let me repeat, we are not discussing insurance company accounts. Then you will wonder what are we discussing. We are discussing one item, one claim, their major expenditure of a insurance company is the claim. They will pay claim. How insurance company work? They will collect premium and they will pay claim. We are having that one item, that insurance claim. That's all. I hope all of you are clear. So for the benefit of those who are very comfortable with Tamil, loss of profit claim, loss of profit policy அப்படின்னா என்ன? லாஸ் ஆஃப் ப்ராஃபிட், இப்போ திடீர்னு ஒரு ஃபயர் ஆக்சிடென்ட்டோ நேச்சுரல் டிசாஸ்டரோ ஒரு கம்பெனியில் ஒரு கம்பெனி இருக்கிற இடத்துல நடக்குது, அதனால லாஸ் வருது. அன்னைக்கு ஆகிற லாஸ் ஒன்று, அதுதான் லாஸ் ஆஃப் ஸ்டாக்னு சொல்கிறோம். இன்னைக்கு அவங்களோட ஸ்டாக் டெஸ்ட்ராய்டு பை ஃபயர், அதுக்கு பேர் லாஸ் ஆஃப் ஸ்டாக். அதுக்கு தனி கிளைம், அதுக்கு தனி பாலிசி. லாஸ் ஆஃப் ப்ராஃபிட் பாலிசி அப்படின்னா அந்த லாஸால அன்னைக்கு மட்டும் இல்லை, ஃபியூச்சரில் 6 monthsக்கோ 1 yearக்கோ அவங்க பிஸ்னஸை நார்மலாக நடத்தவே முடியாது. அந்த 6 monthsக்கோ 1 yearக்கோ அவங்களுக்கு வர்ற லாஸ் ஆஃப் ப்ராஃபிட்டை காம்பன்சேட் பண்ணுறது தான் லாஸ் ஆஃப் ப்ராஃபிட் பாலிசி. லாஸ் ஆஃப் ப்ராஃபிட் பாலிசி. ஸோ இந்த லாஸ் ஆஃப் ப்ராஃபிட் பாலிசி கிளைம் எப்படி கால்குலேட் பண்ணுவோம் அப்படின்னா, இதுக்கு ஒரு செட் ஆஃப் ஃபார்முலாஸ் இருக்கு. நம்ம இது வரைக்கும் யூஸ் பண்ண ஃபார்முலாவை இப்போ யூஸ் பண்ண முடியாது. ஸோ வி ஹாவ் டு யூஸ் different set of formulas. First one, there will be a word called standard turnover. Second one, annual turnover. Third one, previous financial year sale. All the three are different. They are not same. All the three are different. First, what is annual turnover? The turnover during the 12-month period. Let me repeat, annual turnover, the turnover during the 12-month period immediately before the date of loss. So we will go back to Excel sheet. I am explaining you now the word called annual turnover. Annual turnover. Now what is annual turnover? It is the turnover during 12-month period immediately before the date of loss. So if date of loss, I am writing that short form. If date of loss, if the date of loss is 2nd June 2015 to 6/2015, then annual turnover period 1 year prior to the date of loss. So it will start on 2/6/2014. 2/6, or you can even say 3/6/2014. One day nothing will happen. 3/6/2014 to this period. This period we will be calling it as annual turnover. Let me repeat, the turnover during the 12-month period. The turnover during the 12-month period immediately before the date of loss. That is what we call it as annual turnover period. This turnover, this period, we call it as annual turnover period. Annual turnover period. So it is sales during the 12-month period immediately before the date of loss. So if you want, you take first note, annual turnover. Annual turnover, the turnover during the 12-month period immediately before the date of loss. Take that. Annual turnover, first title. You can put title loss of profit policy. Loss of profit policy. Under that, I will dictate some 2 lines. Loss of profit policy. Below that, this policy cover a period subsequent to the date of loss. Next line, the period subsequent to date of loss, is called as indemnity period. The period subsequent to the date of loss is called as indemnity period. Indemnity period. Next line. During indemnity period, the business is severely affected. During indemnity period, the business is severely affected. Next line. Loss of profit policy compensate. Loss of profit policy compensate the loss in such period. The loss in such period. Under that first word annual turnover. First word annual turnover. Below that you take the turnover during the turnover during the 12-month period, the 12-month period immediately before the date of loss. Immediately before the date of loss. The turnover during the 12-month period immediately before the date of loss. Example, date of loss is equal to 2/6/2015. Date of loss is equal to 2/6/2015. Annual turnover period is equal to 3/6/14. 3/6/2014 to 2/6/2015 to 2/6/2015. Fine. If that is also completed, let's go to the next. Next one, gross profit. There is a formula for gross profit. Gross profit, that is equal to net profit. Gross profit is equal to net profit plus gross profit is equal to net profit plus insured standing charges. Insured standing charges. Gross profit is equal to net profit plus insured standing charges. Now don't worry like how many formulas I will remember for gross profit, loss of stock one policy, loss of profit one policy, one formula. Like that, you don't worry. The new formula I said just now is GP, gross profit, is equal to net profit plus insured standing charges. Insured standing charges. What is net profit plus insured standing charge? How this formula come? Simple. If I ask you to compute gross profit from P&L account, not from trading account. Let me repeat. If I ask you to compute the gross profit from your profit and loss account, how will you calculate? You think over like that. How will you calculate? Very simple. You will take the net profit plus insured standing charge. How will we take that? If I am asking you to calculate GP from your P&L, net profit last item, add back all the expense, that total is your gross profit. That total is your gross profit, and that is the way we adopt this formula. What we are doing from P&L, I want you to compute gross profit. How will you calculate? Net profit you will take, expense you will add. That expense is what we call it a standing charge. That's all. And if that standing charge are covered by insurance, we call it as insured standing charges. Insured standing charges. Standing charges are nothing but fixed expenses. Standing charges are nothing but fixed expenses which are not going to be modified. Let me repeat, standing charges are nothing but fixed expenses which will not change due to volume of operation. Standing charge example, interest on mortgage loans. Interest on mortgage loan is one example for standing charge. Then another example for standing charge is permanent staff salary. Permanent staff salary is another example for standing charge. Now the standing charge, it can be taken for our computation purpose, that standing charge. So that is what is your gross profit formula. So don't take it like a new formula. One more step you take. So GP, I told you, easy way to identify and understand. If from P and L I am calculating GP, I will take net profit. I will add back all the expense debited so that I can get gross profit. That expense, many of them not covered, some of them covered. That expense together called standing charges. Insured standing charge alone we add. That is what is your gross profit formula. So in a loss of profit scenario, what is compensated by insurance company, they will pay us the profit. The name itself tells loss of profit. Even if a company operate for 6 months, suppose 2/6/2015 loss, add 6 months, 2/8/2015. If a company operate from 2/6/2015 to 2/8/2015, the result, you will capture that as a gain or loss. So that profit is what is compensated by insurance company. So loss is not loss in sale because purchase don't come to you free of cost. So sometimes people who don't know accounts, those who have no idea about accounts, when they enter supermarket, you can observe this kind of conversation. People not who are not so knowledgeable, if they enter a supermarket, what will they talk among themselves? They will talk among themselves like pointing to the cashier. They will talk among themselves, see how much of profit they are making. Whether all the cash counted by cashier is profit, you as a CS student know it is all not profit. It is just a sale. So if that is sale, there is a parallel purchase. See, purchase is not going to come free of cost. So if a petrol bunk you take, if they have a turnover of 10 crore, 12 crore, hardly they will have few lakhs as profit. Suddenly I am not speaking for business community. That is how nature of business is. So even if business is operated for that 6 month period, their net effect is only profit, and that is what is the real loss because of not operating in full capacity. And our loss of profit claim, and that loss of profit claim compensate for that loss of profit, for the loss in the profit. That's what is getting compensated through our loss of profit policy. So in that, these terminologies are involved. Annual turnover. Then I am going to introduce you now new terminology, standard turnover. Now what is standard turnover? Standard turnover, the turnover during 12 months immediately prior to the date of loss. If I tell this, you will wonder, just now you said this sentence, I have not finished. That is parallel to actual turnover. That is parallel to indemnity period. Let me define standard turnover now. Let me define standard turnover. So standard turnover. What is the standard turnover? The turnover during the 12-month period immediately before the date of loss. Before date of loss. Most important, that is parallel to indemnity period. Or I can simply write parallel to indemnity period. Now, what is indemnity period? Your loss of stock claim, check the previous question. that end on this day, loss of stock claim. But loss of profit claim is going to start from that day. So let us take one example. If 2/6/2015 is your date of loss, then subsequent to that, this is actually annual turnover prior to the date of loss. Before, annual turnover comes before, standard turnover come after. It is like standard actual, which you learn for standard costing. So from 2/6/2015, it should end, let us say, up to, it can be maximum 12 months, it can be less than that also. So maximum 12 months, 2/8/2015. If this period is covered by a insurance policy, we call this as indemnity period. This is what is called indemnity period. Now the parallel period last year, that's what is called standard turnover period. This is called indemnity period. I am going to take parallel period last year. Let's take. So same period last year. So this is not date of last year period, just date, that's all. So 2/6/2014 to 2/8/2014. This would be called standard turnover period. Standard turnover. This is called standard turnover period. So what is standard turnover period? The period or turnover during the 12 month. It is during the 12 month before the date of loss, because from 3/6/2014 it is your annual turnover period. So it is during annual turnover period, immediately before the date of loss, but that should be parallel to actual, parallel to indemnity period. Your indemnity period, loss of profit in short, after the date of loss of stock policy before the date of loss of stock policy end on the date of loss of profit policy stay. Correct, Subhashini. It is like the doubt asked is previous year sales corresponding to indemnity period. Exactly. Previous period sale. It is only that period, not entire previous year sale. Previous period corresponding to indemnity period. That is what sales during 12-month period parallel to last year. That's all. Parallel last year. That's called your indemnity period, standard turnover period, respectively. Now, what we will do for loss of profit claim, you will have two steps. First step, it would be gross profit on short sale. I will calculate two types of claims here. Your first claim, gross profit on short sales. What do we mean by that? Gross profit rate, I told you the formula. GP is equal to net profit plus insured standing charges. That is your gross profit formula. Gross profit rate, GP, divided by previous financial year sales into 100. That is your gross profit formula. That gross profit rate I will apply on short sale. If you wonder what is short sale, standard turnover plus or minus trend reduce actual sale during indemnity period, that is called short sale. In other words, what we are computing and presenting is, if the loss did not occur, what would have been the sale? That is called the standard sale as adjusted for trend. See, let me explain for the benefit of those who can, who are more comfortable with Tamil. See, லாஸ் ஆஃப் ப்ராஃபிட் பாலிசி அப்படின்னா என்னன்னா, என்னைக்கு லாஸ் நடக்குதோ அதுக்கப்புறம் இருக்கிற பீரியட்ல நார்மல் பிஸ்னஸ் பண்ண முடியாது. தியரிட்டிக்கலாக தான் நார்மலாக இருக்கும் பிஸ்னஸ், ப்ராக்டிக்கலாக பாசிபிலிட்டியே இல்லை. எல்லாத்தையும் நம்ம சரியாக்கி கொண்டு வர்றதுக்கு நிறைய டைம் ஆகும். அந்த பீரியடை கவர் பண்ணுறது தான் லாஸ் ஆஃப் ப்ராஃபிட் பாலிசி. அந்த பீரியடுக்கு பேர், இந்த எந்த பீரியட்ல நமக்கு பிசினஸ் அஃபெக்ட் ஆகுதோ அந்த பீரியடோட பேர் என்ன அப்படின்னு பார்த்தா இண்டெமினிட்டி பீரியட். இண்டெமினிட்டி பீரியட். இண்டெமினிட்டி அப்படின்னாலே காம்பன்சேஷன். ஸோ இண்டெமினிட்டி பீரியட். அந்த இண்டெமினிட்டி பீரியடுக்கும் சேம் பீரியட் கம்பேர் பண்றோம். எவ்வளோ மந்த்ஸ் இருக்கோ, இல்லை மேக்ஸிமம் 12 மந்த்ஸ், 1 இயர் வரைக்கும் இண்டெமினிட்டி பீரியட் வரலாம். அதே பீரியட் ப்ரீவியஸ் இயர்ல, அதுதான் ஸ்டாண்டர்ட் டர்ன் ஓவர் பீரியட். எதுக்காக இதை கம்பேர் பண்றோம்? இந்த பீரியட்ல இந்த லாஸ் நடக்காம இருந்தா நமக்கு என்ன டர்ன் ஓவர் வந்திருக்கும், அதை எப்படி கண்டுபிடிப்போம்? லாஸ்ட் இயர்ல உள்ள சேல்ஸை எடுத்துப்போம். அப்படியே அதை எடுத்து போட முடியாது, அது கரெக்டா இருக்காது, அக்யூரேட்டா இருக்காது. அதுல ட்ரெண்ட் அட்ஜஸ்ட் பண்ணுவோம். எந்த பிசினஸா இருந்தாலும் ஒரே மாதிரி கான்ஸ்டன்டா வராது. அது வந்து புக்கில் தான் பாசிபிள், தியரிட்டிக்கலாக தான் பாசிபிள். ப்ராக்டிக்கலாக ஆர்டிகல்ஷிப் போகிறவங்களுக்குலாம் தெரியும். ஒரு பிஸ்னஸ் அப்படின்னு எடுத்துக்கிட்டா லாஸ்ட் இயர் ஒரு சேல்ஸ் அப்படின்னா அந்த சேல்ஸ் வந்து ஒரு 10% இன்க்ரீஸ் ஆகும், இல்லை டிக்ரீஸ் ஆகும். மொபைல் சேல்லாம் எடுத்துக்கிட்டா டயர் 2 சிட்டிஸில் இன்க்ரீஸ் ஆகும். டயர் 2ல இன்னும் வாங்கிட்டு இருக்காங்க. பிக் சிட்டிஸில் டிக்ரீசிங் ட்ரெண்ட் பாசிபிள். போன வருஷம் 10% growth இருக்குன்னா சேம் growth வராது. ஏன்னா மொபைல் நிறைய பேர் ஆல்ரெடி வாங்கிட்டாங்க, இன்னும் வாங்க வேண்டியவங்க இருக்காங்க, இருந்தாலும் நிறைய பேர் வாங்கிட்டதுனால. ஸோ டிக்ரீசிங் ட்ரெண்ட். ஒரு ஒரு இண்டஸ்ட்ரிக்கும் ஒரு ஒரு ட்ரெண்ட் இது மாதிரி இருக்கும். அந்த ட்ரெண்ட் நமக்கு கொஸ்டின்லேயே கொடுத்துருவாங்க. இன்க்ரீசிங் ட்ரெண்ட் அப்படின்னு கொடுத்தாங்கன்னா ஸ்டாண்டர்ட் டர்ன் ஓவர் எடுத்துப்போம், அந்த ட்ரெண்டை அட்ஜஸ்ட் பண்ணுவோம். ட்ரெண்டை அட்ஜஸ்ட் பண்ண பிறகு வர சேல்ஸ் என்ன அப்படின்னா, இந்த லாஸே நடக்காம இருந்தால் நம்ம அவ்வளோ சேல்ஸ் அச்சீவ் பண்ணியிருப்போம். அந்த சேல்ஸ்லேருந்து ஆக்சுவல் சேல்ஸை ரெடியூஸ் பண்ணுவோம். எந்த பீரியட்ல? இந்த பாதிப்படைஞ்ச பீரியடுக்கு பேர் தான் இண்டெமினிட்டி பீரியட். ஸோ அந்த ஆக்சுவல் சேல்ஸ் டியூரிங் இண்டெமினிட்டி பீரியடை ரெடியூஸ் பண்ணால் ஷார்ட்டேஜ் இன் சேல்ஸ், அதை தான் ஷார்ட் சேல்ஸ். ஷார்ட்டேஜ் இன் சேல்ஸ் அதோட இன்னொரு நேம் ஷார்ட் சேல். அந்த ஷார்ட்டேஜ் இன் சேல் அப்படியே நமக்கு லாஸ் கிடையாது, பர்ச்சேஸ் சும்மா வர்றதில்ல. அதனால ஜிபி ரேட்டை அதில் மல்டிப்ளை பண்ணுவோம். பண்ணுனா அதுதான் ஜிபி ஆன் ஷார்ட் சேல். இது ஃபர்ஸ்ட் கிளைம். செகண்ட் கிளைம், claim for additional cost of working. That's your second claim. Claim for additional cost of working. Claim for additional cost of working. What is claim for additional cost of working? இது என்ன அப்படின்னா, it is subject to some 3 conditions. Claim for additional cost of working. First condition, actual additional expense. Second condition, actual additional expense into GP on AAT divided by GP on AAT plus uninsured standing charges. Third condition, GP on continue with what we were discussing. So the second step I was telling you, like a claim for additional expense, it is subject to three conditions. First condition, actual additional expense, how much we incurred, actual additional expense. Second condition, actual additional expense into GP on AAT, actual additional expense into gross profit on adjusted annual turnover. Annual turnover, it is not previous year sale. If loss occur on 2nd of June 2015, 12 months before the date of loss, that's what we call it as actual, annual turnover. That annual turnover, when we adjust for trend, it is considered as adjusted annual turnover. On that, you compute GP, gross profit, that would be called as gross profit on adjusted annual turnover, gross profit on AAT. So, the formula is actual additional expense into GP on AAT numerator divided by GP on AAT plus uninsured standing charges. That would be the second formula. Third formula, gross profit. I mean, this three condition you have to check whichever is the lower among the three. That is what would be paid as claim. Two types of claim I said. Claim 1, GP on short sale. Claim 1. Claim 2, additional claim for additional cost of working. That is called claim 2. And that three condition for that, actual additional expense. Second condition, actual additional expense into GP on AAT divided by GP on AAT plus uninsured standing charge. Third condition, gross profit on sales generated using additional expense. These three conditions we will take. Whichever is the lower of the three, that would be paid as a claim. So two types of claim. I mean, within loss of profit, two parts. One part you will call it as GP on short sale. Second part that you will call it as the claim for additional cost of working. Why insurance company paying the additional cost for working also? Why it is paid? If you analyze the reason, ultimately insurance company also benefited. Look at our first claim, GP on short sale. This is our first claim. So in that GP on short sale, two things we are considering. What are the two things if you check? One is that standard turnover, we adjust it for trend. And then the second one that we consider is actual sale during the indemnity period. These are the two things that we consider. These are the two things that we consider. So, in that, if suppose a person who is insured, if that person don't do any work at all, what is possible? The second part can become zero. If second part becomes zero, insurance company has to pay more claim. And so what happens? If indemnity period sale increase, insurance company also benefit. Why? The amount they pay as short sale, GP on short sale will become less. Due to that reason only, claim for additional cost of working is also paid. So let's go for one example on this. This is what it is. I will show you one computation, how it works, all that. Then we will take up a question slightly later, maybe tomorrow. So two things I said, gross profit on short sale. That is what we should calculate. For that, just now I was telling you these things. Standard turnover, add or less trend, then reduce actual sale during indemnity period. This is called short sale. Short sale means what? Shortage in sale. That is called short sale. GP on short sale, that rate we have to calculate. For GP rate, one working note required. How to calculate GP rate? For that, the working note should be net profit plus insured standing charge. That is what is your gross profit rate. Net profit plus insured standing charge. So this is what is your gross profit rate. I am taking the formula which you have taken in your notebook just now. gross profit is equal to net profit plus insured standing charge. Take that, you will get gross profit, and then GP rate, gross profit divided by previous financial year sale into 100. So we get 30%. 30%. Then second point, the GP on AAT we can calculate when we go to the second step. That rate 30% we apply on short sale. It is, you can take this like a format: standard turnover, add or less trend. So you get adjusted standard turnover, less actual sale during indemnity period. What you get normally, shortage in sales, short sale. GP rate into short sale, what you get is gross profit on short sale. And after taking this, the three conditions which I was telling you just now, first, actual additional expense. Second condition, actual additional expense into GP on AAT divided by GP on AAT plus uninsured standing charge. GP on AAT means adjusted annual turnover. Annual turnover you will take, adjust it for trend. That is called adjusted annual turnover. GP on sales generated using additional expense. Now what I suggest, if you take few minutes also it is fine. Take only the format, don't take numbers. In fact, I will try to hide. Take only the format, and in the next step, what we can do, you can solve the question. At that time, you can take the amounts. Now take this format. Very useful, this knowledge. No need to by heart any formula, format, all that. Logically, you understand. I told you the complete background behind loss of profit. If you know this concept and solve any question, there won't be doubt. You won't make mistake. It will be so clear. But if you don't have the concept, by hearting formula will confuse you. Go by concept. Now take this format. First heading GP on short sale. Second heading claim for additional cost of working. Take both the format. This being accounts class, it should be like you solving the question. It is not a theory class where we rush up everything in a very fast forward mode. I can do that, but the effectiveness will be very less. If you already prepared, you will feel like heaven because everything might be known to you. Suppose we are revising after a time gap, then it will look slightly new. At that time, rush up will create discomfort, and that's why I'm waiting for you to take those formats so that your familiarity is several times high. Janaki, trend will be given in the question. Information trend relating to trend, if it is not given, what you should do, you should compare the sales during the current year, you compare it with the sales during the previous year. Same period you have to compare. And you can get trend. See, what is trend in general? If last year we sold 1 lakh number of number of mobiles our company sold is 1 lakh. This year, if we are selling 1 lakh 10,000 mobile, it is 10% increasing trend. Now, what I have done, I have taken last year sale, taken current year sale, compared the two, and then decided increase or decrease. Same thing you can do by comparing. What you can do by comparing last year sale and current year sale. Very important point, it should be same period. I cannot compare 3 month sale of last year with 6 month sale of current year. Not correct. At the same time, most important message for you, Janagi, that is that indemnity period you cannot take and compare. I am repeating that point. Indemnity period you cannot take in the current year. Same period last year arrived trend wrong. Why? Because indemnity period is a abnormal period. It is not normal period at all. What you compare, there is one Sony limited problem in your study material. Actually, it will look complicated. Actually, it is easy. If you draw a trend scale and do that, you can find. There may be another problem called the S and M, like that. These questions have the trend explanation in detail. If you go through, it will require a lot of your time, and if you go through, you will find it very, very easy. So I'll try to show you a chart with regard to that Sony Limited problem after finishing these things. With that help of that chart, if you work out, your analytical ability will be very easy. I mean, analytical ability will be very high, and you will find the solution very easy ultimately. So if you finished the GP on short sales model, I mean that format, we can go to next. I mean claim for additional cost of working. Claim for additional cost of working. No need to take any amount. Simply take format. That's all. Simply take format. After finishing this, we need to go for a summary. Here also average class applicable. But what we will compare, policy amount with gross profit on adjusted annual turnover. That's what we will compare. Let me repeat, what you will compare is gross profit on short sale. We will compare that with policy amount. We will compare it with the policy amount and GP on AAT. That's how. That average class we can see tomorrow in the morning class. We can finish very quickly. These two formats only you need a thorough understanding. These two formats. GP on short sale, one part. Second part, claim for additional cost of working. Second part. If information regarding trend not given also, Janagi, if we have information of previous year sale with the corresponding period in the current year, then we should calculate trend. Question need not say you have to adjust trend like that. Proof is study material question itself. You can check one yes and dumb problem will be there. They will take the same period current year and last year, calculate trend. That's how it will go. Fine. If these two are completed, this is what is the answer for loss of profit. That's all. It is over. These two are the main answer. Gross profit on short sale. One heading. Second heading, claim for additional cost of working. Two headings with two working notes. This is the minimum. That's all. That working note, first GP rate. How to calculate gross profit, net profit plus insured standing charge. That's your gross profit. What is GP rate? Gross profit divided by previous financial year sale. This is not annual turnover. Gross profit divided by previous financial year sale divided by 100. I mean, gross profit divided by previous financial year sale into 100. Into 100. That is your GP rate formula. I will show you the working notes also. You take that format also. It will help actually. First step, gross profit, that is net profit plus insured standing charge. Second step, GP rate, that is nothing but GP divided by previous year sale into 100. That's all. This much formula enough today. Now, if you have any clarification and doubt regarding the trend computation or loss of profit claim computation, first you can ask. One question we will solve tomorrow. By the time it will be more clear. Today, you can try to ask the conceptual doubt around this loss of profit policy. To the extent time permit, we will solve question. Other things I will deliberate upon the concepts revolving around many topics, which will help you to quickly finish things. And now, any doubt on this particular loss of profit claim? Any doubt? Proceed. Fine. I hope all of you are clear with what we have done so far. So, with this, we will go to a question alone. Just we will start that question, and if time permit, you try to solve that question. Tomorrow we will continue with the answer. Just I'll go through the question in the remaining few minutes. We have another question now. That is, there will be a question called Green Limited. Take that question, loss of profit claim. That is example for loss of profit claim. So I am taking the question now. The premise of second question, the premise of Green Limited was partially destroyed by fire on 1st March 2011, and as a result, business was practically disorganized up to August 31, 2011. So first line itself gives you indemnity period. If you have printout of question, underline and make a note. That is what is indemnity period. Because fire occurred on 1st March 11. Indemnity period is after such fire loss. Setback period during which business affected. That period is 1st March 11 to 31st August 11. Company insured under a loss of profit policy for 6 lakh, having indemnity period of 6 months. So indemnity period 6 months, but detail given only for March, April, May, June, July, August. That is also for 6 months. So fully it is given. So it can be less than that also, but here 6 months full indemnity period related detail given. March 1st. So I have to include March. March, April, May, June, July, August, 6 months. Now, from the details given below, information given below, find out the claim under the policy. That's the question. So I will take it on display so that you will be more comfortable. Just a few more minutes. So if time permits, before we meet tomorrow, you can solve this and join the class. That will be fantastic, and you will find lot of merit in what is done in the class. So actual turnover from 1st March 11 to 31st August 11. This is called indemnity period. Indemnity period sale 3,20,000. Same period last year, the name we give for that is standard turnover. That is 9,60,000. Third turnover is annual turnover. Turnover during 12 months immediately before the date of loss. That turnover 24 lakh. Net profit for last financial year 3,60,000. Insured standing charge for last financial year 2,40,000. Uninsured standing charge 20,000. Turnover for last year only for gross profit rate we take that 20 lakh. The company incurred additional expense amount to 40,000 after fire, which reduced the loss in turnover. Otherwise, turnover during the period of dislocation would have been only 220. That means due to the extra effort, they are able to earn 1 lakh. That is given 320 actual turnover. If that expense not incurred, they would have got only 220. That means turnover due to additional expense 1 lakh. The saving in insured standing charge 10,800. All this we will consider. Now only one note you take, and with that we will finish today's session. That is for indemnity period. If you have taken indemnity period, fine. Otherwise, take it now. GP on AAT. Exactly, Subhashini, correct. GP on AAT is insurable amount, correct. For loss of profit, that is what we have to cover through insurance. Insurable amount, another name, correct. Now let us continue. Let us continue. What I was telling was regarding indemnity period. If you have taken this note, check out. Otherwise, take it now. This terminology, one word, very, very important. Indemnity period. The period after the date of loss. Take just 2 lines. Indemnity period. The period after the date of loss, during which the business is severely affected. During which the business is severely affected. The maximum indemnity period cannot exceed, the maximum indemnity period cannot exceed 12 months. 12 months from the date of loss. From the date of loss. Now If you have any doubt, never hesitate, you can ask. Now you can ask through chat because that's the only mode of communication available to us. Anything on loss of profit so far, or any doubt you have when you worked out, you can ask that. Proceed now. See, world over, the classroom format is changing. At least temporarily, we can see. In CA classes also no exception. Earlier, we used to have live one-to-one class. Now we don't have a possibility within the near future. So we don't have an option literally. At least you people, some of you would have completed regular class. For the students who are going to appear for November or December exam, as the case may be, even that is not confirmed. I mean, whether they will have a direct class, face-to-face class, itself is a doubt. They have to go by online mode. So today we are literally forced to adapt to online mode. As faculties, for us also, there was a time where we used to write only on board. Now those days are changing. Some of our professional practice we have to bring to class, like usage of Excel, all that. Excel is not a big thing, but using formula not required. See, just because we adopt it in class, you avoid the Excel use through formula. Why? Because some students they take the photocopy of what is getting solved in class. They take a copy, retain that, and that is not a good habit. As long as you face the exam in paper pen mode, ensure that every time you solve by yourself and never create any ambiguity in answer. What is ambiguity if you wonder? Some students are there, what they will do, they will write a balance sheet total first. Balance sheet, suppose, let's take this 26 lakh 40,000 as our balance sheet total. This is balance sheet total. Assume this is AAT, just for classroom purpose. Assume this is balance sheet total. And after that, if they are unhappy, they will put like this cross mark. Even up to now, no problem. You need not be happy with all your answer. So if you are unhappy, cancel, no problem. Up to that also okay. After that, this is called professional ambiguity. Some students, because of exam tension, without knowing what they are doing, they will be doing this. So thereafter, like this. Like this means how you will see. Let me share this for want of presentation. I mean, so we cannot be vague in our presentation. We have to be very clear because it's a competition across India. See, look at this. First they cross the answer. After crossing the answer, if they want to rewrite balance, after some time they feel like 26 lakh 40,000 correct balance sheet total, then what is the proper procedure? They should rewrite that 26 lakh 40. Instead of that, exam tension, due to that, what they do, they put a tick mark on the crossed amount. Now see the problem for examiner. See the problem for examiner. Examiner will wonder whether this fellow is telling the answer as right or wrong, like that, because first there is a cross mark, again there is a tick mark. Now latest trend on this, they write okay. What is the meaning we are trying to tell? Whether the answer right or answer wrong. This confusion rattles the mind of examiner. Consequence, they are afraid whether this person accepting the answer or refusing the answer become an issue in their mind. Similarly, normal days itself, when we prepare a balance sheet, that balance sheet we are preparing for a long time, right? If we are a commerce student, right from our higher secondary, we do that in foundation or CPT, as the case may be, inter also. That balance sheet, once it tallies, we are elated, delighted, very happy. So normally what they do, Once the balance sheet tallies, they put smileys below the balance sheet total in the regular practice. This practice continues in exam. After finishing the balance sheet total, they put two smileys below the balance sheet total. That's not right. That tantamount to sharing a coded message with the other side. Kindly avoid. Don't do that. So if there is a balance sheet and balance sheet tallied, you are very happy. You are a person with smileys always. No problem. Draw all the smileys in your question paper. At least that you are going to bring back only. Don't put any smiley in the answer paper because these are reasons for which result can be withheld. If you put smiley, it amount to sharing a coded message. So it is like it is against our ethics. In the answer paper, we are supposed to write only answer. That kind of a reason. These two small points keep in mind and use accordingly. So with all this, thank you all for the time, and we will continue tomorrow.